everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. Today, we're taking a look at the gold futures. Now, gold, a little bit of an interesting one today. Given the last several days, as you can see, really haven't gone very far, right? We're just kind of stuck in this same range area, not really getting a whole lot done, and for the most part, kind of having a hard time. So with this range-bound environment, we're assuming that, well, pretty much everything is going to be a range. Now, we're right in the middle of price action. And a lot of times ranges will break themselves up. Like we see here, we have a little bit of a range. The bottom edge of this range seems pretty good as well. So it's kind of appearing as a sort of tiered type of range. We open up Monday, today, with a nice gap higher and then really bad follow-through. Notice the horrendous follow-through. First candle of the day, pretty much non-existent. Second candle of the day is a doji. Third candle of the day finally gets something going, but then starts getting really bad follow-through. So we're assuming that, hey, this is probably a range, and a lot of times in a range, when we first open up, the market wants to cycle up or down to test an area of support or resistance, and then go from there. If we look backward, the most recent area of support or resistance is going to be this prior major swing high. So that's going to be what we're looking for, right? This area is going to be on the hit list of the market. They want to come up and tap this location so that they can start buying off of something that makes sense. If this is going to be a range-bound market, buying off of sort of the middle of the range, of the bigger range, makes a lot of sense. So what that offers up is the ability to become a short seller right off of the bat. We have an attempted bull move up. They try to get continuation and completely fall apart. The sellers don't really show up very much, so maybe this is just a pullback for the buyers to jump in. But when it's time for the buyers to show up to the party, they don't, right? Look at this candle. That's not going to entice any buyers ever to buy above that. That is a bad-looking candle, and that means that if it's a bad buy signal, it's probably a good sell signal. We turn back around and get a very nice bear candle down, and that is your secondary attempt from the highs to drop the market lower for the sellers to take over and drive it down to that level of support. And that's exactly what happened. We drive down to that major level of support, going backward a little bit here, right there. We test that major support. We get the initial bounce, proving that that is the area that the buyers want to come in on. When the sellers try coming back down, they fail to even make a new low and turn back higher, and that allows for a secondary buy move back right up again towards the highs. And now the major objective for the buyers is to get towards those range tops, right? Get back up towards that monthly level of resistance at 61.8. It's very close, and you can see it's sort of forming a little bit of a wedge now. So we're getting a slight exhaustion on the move up, and it makes perfect sense given the location. In reality, there's probably a lot more trades you could have taken, breaking it down into slightly more aggressive type traders, buying the close of this big bear bar, buying the first turn higher, even selling this for a small scalp. Those are all possibilities. But for the big part of this type of video, I'm really looking for the best looking opportunities we can get our hands on and leave the aggressive ones to the aggressive traders. I'm more of a conservative one myself, so these are the ones that really kind of stuck out to me. Nice little sell attempt down and a beautiful buy attempt back up off of support, all lining up with technicals and psychology in the sense that we know that we're in a range. Buyers are going to be hesitant to buy unless it's testing support. And waiting for that test of support is all it took before it started bouncing back up again. So that's going to do it for this one. Hopefully you learned something. Hopefully you found it interesting, maybe a little bit entertaining as well. And we'll see you next time.